Hello everyone, welcome to Gyan Kosh. Today we will study about some important terms and some important data figures which will be useful for your RBI Grade B Phase 1 examination. Okay, let's start with the policy rates and other things. First thing is repo rate. Like, suppose if banks want some amount, they may borrow the same from RBI, okay, at repo rate. So, it is mainly overnight lending rate at which banks can borrow money from RBI. It is under LAF, Liquidity Adjustment Facility. Okay, the rate is 5.5%. Then, if banks have some surplus money, they can deposit the same at standing deposit facility rate, which is 5.25% with RBI. Okay, and the third important term is MSF, that is marginal standing facility. If bank wants to borrow the amount from RBI, they can again borrow at 5.75%, which is MSF. Now the question will arise, if banks are able to buy at the rate of 5.5%, then why will they go for 5.75%? Okay, so if banks are able to buy at repo rate, then why will they go for MSF? Okay, so the thing is, in case of repo mainly runs in the daytime of LF windows, while MSF is available end of the day from 7 p.m. to 11:59 p.m. You have to remember this time also, 7 to 11:59 p.m. It is actually recently amended. Okay, for sudden gaps. Okay, suppose after the market hours, if banks require more money, okay, for fill the sudden gaps, suppose CRR shortfall is there or settlement failures are there, then they can buy from MSF window. Okay, also in case of repo, borrowing is limited by auction allotment. Okay, and if limits are exhausted, again bank will go for MSF. And again, RBI wants like market discipline. Okay, so it discourages routine reliance on RBI. So first, ideally bank should go for interbank rates, like from another bank they should buy, like take money or borrow money, then repo, and then MSF only as a last resort. Okay, so these three things make LAF. Okay, LF corridor, liquidity adjustment facility corridor. Now for like fixed reverse repo, you have to just remember the figure, 3.35%, bank rate is 5.75%. And yeah, now CRR and SLR. CRR is cash reserve ratio and SLR is statutory liquidity ratio. Okay, figure you have to remember, 3.75% and 18%. So banks have to keep a certain percentage, which is as present 3.75%, okay, of their net demand and time liability with the RBI in cash. Okay, so on CRR, interest won't be paid. Okay, but and it is covered under section 42 of RBI Act. This section also you have to remember. Okay, and then SLR, it is 18% of NDTL. Okay, it is mainly like put in secured things like government securities, gold, etc. Okay, and it is governed by the RBI Act and sections 24. Okay, so why CRR is required? Actually, one reason is like some immediate cash bank should have. Suppose some payment settlement issue is there, or systematic risk needs to be reduced. For those purpose, CRR is kept. Okay, again, if RBI wants to absorb liquidity, what it will do? It will increase the CRR rate. Okay, so banks have to keep more amount with RBI, so they will have less surplus to lend to general public, so liquidity will get sucked, okay, or absorbed. And similarly, if it wants to inject liquidity, it can reduce CRR amount. Okay, the same thing is with SLR also. Okay, so yeah, now one more important thing is upper and lower limit of CRR and SLR. Okay, so there is no presently there is no cap over CRR, no lower or ceiling limit over CRR. Okay, but in case of SLR, maximum SLR can be up to 40%. ठीक है, while there is no statutory lower bound limit of SLR also. Okay, now these like some quick meanings are given. uh, you must know, or you must have, like, these are normal things only. In case of MSF, as present, what is the corridor? Repo, MSF, and this SDF. It is 5.5%, MSF is 5.75%, and it is 5.25%. Okay. In case of CRR, no interest is paid. Okay. So now the next important thing is NPA and SMA. Okay. So first of all, what is overdue? Overdue is any amount not paid on the due date. Okay. Suppose due date is 30th April. It is not paid on the 30th April, then it will become overdue on from 1st of May. Okay. Also there is a, like, out of order, one more term is there, so it is okay. Like, you can read it from here. Now the important point is SMA, special mention account. Okay, so if that overdue is from 0 to 30 days, then it will be SMA 0. From 31 to 60 days, it will be SMA 1, and from 61 to 90 days, it will be SMA 2. Okay, so these buckets you have to remember. Okay, then first of all, amount get overdue, then it goes to SMA. Okay, now 90 days done. Okay, from 91st of day, it will become NPA. Okay, so for NPA, like for term loans, interest or installment you overdue more than 90 days, then it will be triggered as considered as NPA. Similarly, for bills overdue, for main thing is more than 90 days. One exception is there, one CC, like cash credit or overdraft account. In those cases, it's if account is out of order. Out of order definition is given here. Suppose outstanding amount is more than the limit or drawing power continuously, or no credits in the account continuously, or credits are not enough to cover interest debited in previous 90 days. Okay, so it will be called as out of order. The important thing is, which go beyond these 90 days, is in case of agricultural crops or agricultural loans. Okay, if agricultural loan is short duration crops, then if 2 crop seasons are overdue, it will be considered as NPA. And in case of long duration crops, in 1 crop season overdue is there, then it will be considered as NPA. Okay. So first of all, overdue, then SMA, then NPA, then classification of NPA categories. Okay, so if NPA is for less than 12 months or equal to 12 months, it will be considered as substandard. Like 12 or less month, if any asset is NPA, it will be considered as substandard. If it remains substandard more than 12 months, it will be considered as doubtful. And loss asset will be if bank RBI auditors tell that there is no recoverable value or identified it as a loss, then it will be considered as loss asset. Okay, it needs to be fully written off. Okay. Some other RBI important terms are these are normal terms you must have known, like open market operation, VRR, LF, MCLR. Yeah, this WACR, it is one important term. Actually, it is the operational target around which RBI steers overnight rates via LF. So if direct question direct question can be asked, what is the operational target of RBI? Okay, so it will be WACR, weighted average call rate. Remember this term. Okay. Now another important topic is monetary policy committee. Okay, so in general, sections won't be asked in too detail, but these two are very important sections. Like 45ZA is inflation targeting. Okay, it is not just a section, it is an entire concept. Okay, and second, constitution of MPC. So 45ZA and 45ZB. These two sections you have to remember. Okay. uh, Other things is like composition of monetary policy committee is three members from RBI. One is governor who will be chairperson ex officio, one deputy governor in charge of monetary policy, and one RBI officer nominated by central board. Okay. And three external experts appointed by government of India. So total 6 members will be there. External member ki term. So these 3 members, term of those experts will be 4 years and they won't be eligible for reappointment. Okay. Now meetings, at least 4 meetings as per Act. Act has given that monetary policy committee needs to meet at least 4 times in a year. Okay. But in general, RBI schedules 6 meetings, like bi-monthly. The latest meeting was held in October only. Okay. And quorum must be of 4 members. Okay. Voting right is like normal 1 member 1 vote, and in majority wins, and governor will have a casting vote in case of tie. Okay. And the resolution of the meeting will be published like on the 14th day after each meeting. Okay. And that's enough. Then monetary policy report. RBI must publish every 6 months monetary policy report. Okay. So while they have to meet 4 times in a year, okay, it has to publish monetary policy report every 6 months. Okay, section you may not remember, no issue there, but every 6 months monetary policy report must be published by RBI. Now, in case RBI is failed to achieve the target, what target? Inflation target. Okay, or it breaches the tolerance band of in for 3 consecutive quarters, then RBI must send a report to Government of India explaining the reasons, remedial actions, and time frame within which it will be resolved or it will be settled. So, what is the tolerance band? Like actually, in every 5 years, Government of India takes a decision in consultation with RBI that how much inflation target should be. Okay. So currently, for the period from 1st April 2021 to 31st March 2026, that band is 4% plus minus 2%. Okay. So if inflation is from 2% to 6%, then RBI need not to give any explanation. Okay. And on 31st March 2026, they will again decide for next 5 years what will be the inflation target. Sorry. Now another important topic is Basel in India. Okay. So main body is Basel Committee on Banking Supervision. Okay. And headquarter is in Switzerland. Membership and all. It is the important thing. What are the 3 pillars of Basel? Okay. One is minimum capital. Like capital is the first pillar. Second is supervisory review, and third is market discipline. So remember these 3 pillars. Okay. So it is again an important thing. Like from the first pillar, that is capital advocacy. These are some things which you need to remember and understand. Okay. So there is a mandate by the Basel III that each institution covered by the Basel has to keep some minimum amount of capital. Okay. The most important one is the CRAR, total minimum capital. Okay. What is CRAR? It is actually CRAR is like, if you want formula, it is total capital in which there are 2 types of capital, tier 1 and tier 2, divided by risk weighted assets multiply by 100. Okay. So we won't go much deeper in it. Okay. But CRAR in general, like for Basel 3, limit is 8% only. But India RBI has kept some higher limit, that is 9% of risk weighted assets. Okay. Then what is tier 1? This one. It should be minimum 7% of risk weighted assets. Okay. Tier 1 capital is made up of 2 things. The common equity tier 1 and just hold on. Uh, and one is CET1. Yes. Then first is CRAR. It should be 9%. Then tier one capital, it should be 7%, and then CET1, like common equity tier one, it should be 5.5%. Okay, CET is the like prime capital, common equity only, like in paid up capital reserves after regulatory adjustment. Like it is the core capital of the owners of equity shareholders. Okay. Similarly, capital conservation buffer should be 2.5%. Okay. These all figures you have to remember. Okay. Tier one capital is called going concern capital, and tier 2 capital is called gone concern capital. Okay. 81 and all, it is also written here, but like if you cover these things, it will be enough. Okay. Yeah. So, yeah, tier 2 capital is normally subordinated debt. Okay. Okay. Now, systematic buffer. More important topic is DSIB surcharge. Okay. Domestic systematic important bank surcharge. In these cases, extra CET1 capital is required. CET1 is common equity. So in general, for normal banks, 5.5% of risk-weighted assets should be CET1. But in case of domestic domestically systematic important banks, one additional surcharge should be there. Okay, so there are five buckets in India. No one is in the bucket 5, but SBI is in bucket 4, and additional 0.8% CET1 capital from with effect from 1st April 2025 will be required. Till 31st March 2025, it was 0.60%. Okay, so you have to remember this date, this amount, this percentage, and bucket 4 of SBI. Okay, in general, CET1 minimum capital should be 5.5%, and in case of SBI, it should be additional 0.80%. Okay, in case of HDFC, it is under bucket 2, and 0.4% CET should be additional, and in case of ICICI Bank, it is under bucket 1, and 0.20% CET should be additional. Okay, so yeah, now from this 1st April 2024, RBI issued prudential regulations on Basel 3, in which all India financial institutions are also covered. Okay, like Exim, NABARD, NHB, SIDBI, etc. Okay. Yeah. Now there are some other important things. Like RBI publishes FSR, Financial Stability Report. It is published twice a year. Okay. One is trend and progress in banking. Okay. It is yearly report. Okay. Then annual report. Okay, and some other things. So from those reports, we have made some important we have covered some important things. Like if we start covering entire reports, we can cover, but for you, like, you have to focus on limited things. Like if you have time, you can cover other things also, but we are here, I will explain the important things only. Okay, so according to us, like if some particular ratio is after this G gross NPA ratio in of March 2024 was 2.7% only, and it was lowest in last 13 years. So it is an important figure. Okay. Similarly, fraud count by reporting also lowest in a decade. Okay, average fraud value lowest in 16 years. So this figure is actually very important. Okay. This thing, the top 100 borrowers of March 2025, none of were NPA. Okay, zero count was there. Then yeah, in case of UPI, okay, in our UPI in case of real time payment, world share is highest. Like India's UPI holds 48.5% of total real time transactions of the world. Okay, it was covered in one speech. Okay, speech by governor, deputy governor, we covered those things also. Then again, one superlative thing, India was the largest recipient of remittances. Okay, amount you may or may not remember, but India was the largest one. Okay. Also, India is the fastest growing economy in fastest growing major economy of 2024-25. Okay. Largest GSEC holder is banks. Okay. And in case of PSLC market, like that priority sector lending guidelines are there. Okay. So if anyone is not able to meet those criteria, then they can purchase the certificate, priority sector lending certificates. Okay. So highest trading value of us for this category. Okay. And yeah, in case of All India Financial Institution, NABARD holds the largest amount of assets, like more than 50% of assets of all India financial institutions are held by NABARD. Okay. In case of, like, it is scale based regulation. Okay. Of NBFCs. Okay. So there is base layer, middle layer, top layer, and upper layer. Okay. Upper layer and top layer. Okay. So base layer NBFCs are 96% of total entities. Okay. So which category of NBFCs, uh, um, which layer of NBFC has the highest number of entities is the base layer. Okay. And in case of asset share, NBFC middle layer has the largest asset share. Okay. Other things you may skip. Yeah. In case of currency notes, rupee 500 note is the largest share by pieces. Okay. It has 40.9% of all the currency notes in circulation in India are of 500 rupees. In case of banknote value, again 500 rupee note dominated this thing, and the second largest is of 10 rupees notes. Okay, by volume. Now there is a concept of strips. Okay. Actually, what is this concept? Strips is a full form of separate trading of registered interest and principal of securities. Okay. Actually, it is a coupon bearing bond. Um, in this strips, what happens? A coupon bearing bond is stripped into zero coupon pieces. Each coupon becomes a separate security that that is called coupon strip, and the principal becomes a separate security. It is called principal strip. Okay, they can be traded independently and mature on their respective cash flow dates. Okay, so this was already in like place for central government strips. Now just remember this thing, that it is also available for state government securities. Okay. Then under GST, West Bengal was the first state fully onboarded in case of online memorandum of error. And yeah, it is one important thing. This dot bank dot in domain. Okay, so to reduce number of frauds, it is mandated that bank will shift to this dot bank dot in domain. Okay, by 31st of October 2025. Okay, so every bank will have at their end, like after end of their name, dot bank dot in domain. Okay, they have to comply it by 31st of October 2025. Okay, and IDRBT, okay, it will be its exclusive registrar. Now what is this IDRBT? It is the Institute for Development and Research in Banking Technology. Okay, so IDRBT shall guide the banks on various aspects related to application process and migration to new domain. Okay, you have to remember this entire thing because it is also important for exam point of view. Now this DICGC, okay, insurance coverage of your deposits. Okay, so the limit is 5 lakh rupees. You must be aware. Okay, 5 lakh rupees per depositor per bank. Okay, and limit applies, and it covers both interest as well as principal, this 5 lakh rupees. Okay, it applies separately across different banks. Okay, your saving account, current account, fixed term, recurring deposit, everything will be covered by it. Okay, and all commercial banks have to do this thing, and the premium of this particular like DICGC will be paid by the banks. Okay, and not by the depositors, and directly like anyways the bank will recover in any way, but directly bank cannot recover it from the depositors. Okay, now that UPI global goal, there is a goal of RBI that it wants to get this UPI to 20 countries by 2028 2029. Okay, and one Har Payment Digital is one initiative, उसकी theme है India pays digitally for 2025. Okay, now next is current affairs. It will be covered by some another lecture. Like we'll try to we will try to cover September, August and July current affairs through this video. All the important things will be covered, and like those who have enrolled must have have been given current affairs from March onwards, so they can do the entire things. But we will cover video. In video we will cover from July, August and September. Okay, thank you.